What is happening, people? It's Louis here. Today is our technical analysis episode, or my technical analysis episode. And yeah, so we're going into August now. It's the 31st of July. Tomorrow is the 1st of August. And it's been pretty interesting. The changing, the changing momentum in the market. And I would say it's relatively short-lived. Potentially, the market is gearing itself up to get better entries over the past few months, and preparing itself to go short on the US dollar. So this is like confounded by COT reports. So like commercials, for example, are going short on, or have been overwhelmingly short on the US dollar at resistance. So yeah, we got that spike. Let me just turn off all indicators. So as you can see on the US dollar, as expected, over the past few weeks, I've been calling a reversal in this zone, and of course, wick off kind of type of thing. We got our first impulse, retracement, second impulse, but the second impulse wasn't as high as the first, of course, as usual. And then we get this like kind of a range. And the first call, I said that this was going to be a change in momentum, was this bullish breaker over here, breaking this uptrend, or breaking the market structure, and then we managed somewhat to kind of, I'd say, manipulate ourselves upwards. And yeah, of course, it was short-lived, and we are back down, which is nice. Nice to be right about that, despite what other people are saying. But yeah, we are here, but we have no money behind it. Jesus, I can't really run my mouth over here. Cash, not in my mouth. But anyways, now it looks like, yeah. So my hypothesis was that we would reach resistance, and we're going to reverse now back to this support or even lower. And this is supported by what USD commercials are doing. So central banks, not just central banks, just money supply. And they are now only 5.4% long, which is a sign that, of course, they're overwhelmingly short at resistance. And that's a change in momentum. Of course, over the past week, we have got that. If you go on the weekly, you can see that, you can see that we are attempting to break this bullish breaker now, and we have broken it. We haven't closed below it. We've just closed on that line there. And just based on this wick, there is orders now. Selling orders, sell orders, expecting price to go lower. So in the meantime, I do expect drawdown on these early sellers to go maybe upwards up to here, not surpassing these highs, but just coming up to here, even maybe rejecting this supply zone before collecting more sell orders to go lower. Okay. So the idea now is that we are going to go lower on the US dollar, and we're going to fill this space here, or even lower. So let's go on the monthly as well. And the monthly, we saw on, I think, June, we've had that massive bullish candlestick, and that was on the hopes, or that the Fed would turn hawkish on monetary policy, and the hopes that inflation would uptick quite a lot. But it seems that that dream has faded with July and the Delta variant. So this is not just because of the Delta variant. Recently, I've been doing some research on ICT, or just watching some ICT videos, and he talked about seasonal tendencies. So you can find this in your own time, if you do watch this for that matter. You can find this on Telegram. This is called seasonal tendencies. And basically what it basically does is, it looks at a whole year, and then it takes the average price around that time of year on a 40-year average, a 15-year average, and a 5-year average. And for example, this is palladium, a metal, if you didn't know. And as you can see, around August, September, we start to see a rally in palladium. And then towards the end of April, we see towards the start of April, we see a sell-off in palladium, which lasts until late June, early July. Okay, so this is basically like, if I was to trade palladium right now, we're starting in July, I would look to maybe get some shorts now. As you can see, we are going lower, but as you can see, this is a start of August, and at the start of August we get a big up move in the market. So a seasonal tendency, we get to see a upswing in palladium. So I can be fairly confident in saying, using this 40, 15 and 5-year averages, I can be fairly confident in saying that palladium will go upwards over the next few months. Okay, so until December, or no, in fact until April, I can say that palladium will continue to rise, which is interesting, isn't it? And yeah, because this kind of makes sense. So maybe, like, because obviously palladium is a rare earth metal and supply is scarce. So if supply is scarce of something, we can expect price to continue to rise. We can continue to rise throughout its presence in the market for as long as it trades. Yeah. So I digress, and I am now going to search the US dollar. So let's go back and let us search the US dollar. And as you can see, we have the US dollar here. And so it looks a bit messy right now, I must say, but there is some kind of confluence over here. So we're over here in this red line. We are towards the end of July, and we're about to start August. So what does the dollar do at the end of July / the start of August? So it looks like we drop into the early part of August, and then we bounce back upwards toward mid-August. So mid-August, it looks like we're bullish on the dollar, but then after mid-August, we look downwards. Okay, downwards, and then that basically, if we look at the blue line, which is the 35-year average, we can see that we just continue to go downwards on the dollar, depreciating in value until mid-October, where in mid-October we see a trend reversal, and on that trend reversal we look at upside moves on the US dollar towards the end of the year, and then towards maybe 3/4 into December we get that final sell-off on the dollar going downwards. So this is roughly what we can expect from the US dollar, and it looks like we are kind of, I would say on average we are down. So from mid-August, I would say that we are bearish, or we can expect the dollar to depreciate significantly in price till October. So bearing that in mind, let me just sort this out. Sorry. Let us go to the dollar index. Okay, so we're in a dollar index, and let's go on the weekly. Actually, let me just see. Let's just kind of cross-reference this. So let's go back to the dollar index, and let's go from January, for example. Or actually, let's go from the significant move which happens in April, or the end of April. So it looks like from the end of April, well, literally the start of May, we see a big rally in the dollar for the month. So let's see what happened in May this year. So I believe May was quite bearish. In fact, it's quite bearish this year. So maybe that was of course due to the coronavirus. Let's just see. So we've got 2 weeks. We had 2 weeks of very bullish momentum in May, and that went over 2.2%. Let's see previous Mays. And here's another example. This was in 2016. May was incredibly strong, and we saw that big up move for May until December, and then in December we got that drop. Let's go again. So this is May 2017. We were bearish. Okay. And then May 2018 we were quite bullish. So let's see. This is the average. This is the average of what happens over like 35 years. So over 35 years, on average, we are bullish for May. Doesn't necessarily mean every year is bullish. for May just means that on average, that's the case. Okay, so let's continue. So yeah, from October, I'm bullish on the dollar. Let's go again. Let's see from October. So I'm just literally just seeing this as it is. So yeah, from September to October, we're bullish on the dollar for 2020. And also, let's see, September, yeah, we were kind of opposite to that, but in September, late September, we were bullish on the 15-year and the 5-year, which is interesting. Yeah, interesting. Yeah, let's continue. Oh, so yeah, over here we were bullish September, October. September, October, we were bullish in 2018. September, October, we were bearish. And so. Yeah, so maybe not exactly to the T, because of course we do have other variables in the market, and seasonal tendency is not the overriding market like holy grail here. It's just another indicator we can use to determine which direction price could go. So anyways, in terms of that, I digress, and I am now bearish towards this support. So continuing, before I lose myself and I get bored, I am looking towards this support. So, but in the meantime, I do expect us to I expect us to make a retracement. So, as you can see, last week we had that big bearish sell-off and we broke two key levels. So this was a bullish breaker at that 50% line, and here was another bullish breaker, and it looks like we're going to get a trend reversal now. We've broken this market structure here. So now what I would do is I would look at this Friday's close, and I would look to maybe get an entry around here before going up towards either the 50% or the 0.62 or the 62% retracement, looking to enter around here before going downwards towards support on a dive of around 3%. So that is the idea behind the dollar. I'm looking upwards towards this area before continuing downwards on the COT report, and not just on the COT report, but a multitude of different factors. But it seems that the market or central bank, the Fed, wants the dollar lower just to help improve its exports. For example, if the dollar is cheaper, exports are better, and of course exports are a major part of GDP growth. So if exports are reduced, then the GDP doesn't grow, and that's when the dollar is expensive, exports are obviously dearer and people can't buy them as much, so the demand for US products decreases when the dollar is expensive. So it makes sense for the Fed to drive down the dollar to make it cheaper, and thus takes a stance that is dovish, and it shows that we don't want to intervene in markets yet, and we just want to maintain our current QE, so Q eternity. Anyways, so again, what I'm trying to say, bottom line, is that we are going to get a retracement in the dollar. We could get a retracement, in the dollar, coming back down to here before making a sub retracement up to around this area, this green zone preferably, before getting some orders to go lower towards the support. So I'm going to draw an arrow here, and then we're going to go down there. That's the idea here. So up, more or less up fundamentally, then down on the US dollar. So just to support that hypothesis, let's go to bonds. And so, okay, pardon me. So I just burped. So from the end of August, so from July, so actually from the start of May to August, we get a rally in bonds, which is a sell-off in yields. When bonds go up, we usually get yields go down, and also the dollar goes down too. We also get 10-year, we can look at 10-year bonds, and that's the same case. Bonds rally between around June and August, and 5-year, this is the 5-year, and you can see that too, very strong rally from June to August. And then in the 2-year as well, strong rally from June to August. So you can expect that, the dollar will decrease over this time as bonds rally as well. And when bonds rally, yields decline. And when yields decline, there's less, like the market is pricing in less. The market can be seen to price in less chance of the Fed intervening in markets, as the market believes that inflation over like maybe 30 years or 10 years, 2 years, 5 years is going to be lower than 2%, for example, as we've been seeing. When yields are below 2%, then, or nominal yields are below 2%, then we can expect the dollar to decrease, as the Fed is not willing to increase monetary policy. That's how people could interpret it. Don't know, interpretation changes, but the phenomena remains the same. Anyways, let's continue. That was a fucking long preamble, but anyways, so I'm looking bullish on the Aussie dollar. So as I said, I think we could be going down a bit lower. So let me just go naked on this chart, and you can see that the Aussie dollar has broken this bullish breaker, and that is a sign that we could test these lows again. If we go on the weekly, we can see that we're still in momentum, but it looks like we are on that second impulse. Here's our first impulse, retracement, second impulse, and now on the second impulse we're looking for an accumulation. So using that idea, we're looking for accumulation, and also a spike in volume, bullish volume over here, significant spike in bullish volume. I'm looking to enter around this zone here. So let's go put our clothes on here. And you can see that we are at a demand zone, and that coincides with this price activity over here. It's not quite obviously this is much larger, this is demand zone, but I believe that this is an area of illiquidity, and we will be lowering our spreads between bid and ask, and we will be getting fair amounts of cheap orders in this area here to go long. So that's what I think we're doing. That coincides with a dollar weakness, but arguably if we were to go up higher on the dollar index to this amount, we could go in fact lower than the lows made on Aussie dollar. Just on relative terms, we could even go down here, but the idea for now is to maybe just try our luck, enter between 62 and 79% retracement, and then put our stops just below the low at 105 over here. So let me just go on 4 hour, and super messy. Apologize for that, really messy. Oh god, you know what, never mind, don't like how messy it is. Super fucking messy, but so the idea is just to enter around here, even at the 79, because we still have that momentum, but I do believe we'll get maybe a spike down to 79, maybe pierce even, I don't think we'll go down to 1, but just around this area, just to enter here, you dig. But anyways, let's go to Kiwi dollar, and Friday we closed bearish on those dollar bulls, but we did not break any bullish breakers. We in fact continued this uptrend. We can confirm that on arguably we can confirm that on the line chart. You can see we didn't break lower, so we're still in this, and we could potentially use this as a opportunity to look upwards. I think we're obviously accumulating right now. We could in fact test this demand zone, maybe go down, I think, into the demand zone. So I do expect us to test this low over here before continuing upwards on some kind of bullish volume. As you can see, we did have that massive spike in bullish volume, but we'll just have to wait for the accumulation to continue. And I think we are waiting on the NFPs next week. But anyways, let's go to the pound. The cable, Wagwan here. Cable, yeah, as you can see on the daily straight up, we've been having this rally here. And yeah, this is the spring effectively. So you saw this was like a few weeks ago, we did the wick-off setup. We had this sell-off here. And then we got that rebound. So that was a selling climax. Got the rebound there. And then we got the average range or automatic range. And then we went down, rebounded. And then we decided to continue to sell off. And maybe this was like the kind of like milking the sell-off. There was a really, if you put your orders here, you would have been stopped out super easily. We went like 200 pips lower. But I think we are back on track to the upside here on the pound. Weekly was pretty bullish. I think we could enter around here before continuing upwards. We do look like we're in a head and shoulders pattern, I know, and that is a sign of reversal. So we might have to watch this for a little longer. But I do expect us to maybe retrace down here. In fact, let's put a little bit of retracement in. So let's go from here to here. And yeah, the retracement area is looking at this zone here. So until then, potentially we could be down 200 pips. So it's not precision. I know a lot of people love trading this, but it would be pretty risky with 150 pip stop loss. A bit crazy. But the idea is to enter or exit at this high, 2018 high, slash June's high there as well. So the idea is we're going to retrace as usual on most of the pairs I'm looking at, retrace and then continue upwards. And let's go to Euro USD. And the euro has been very firm and has been pretty much. The ECB doesn't want a strong euro, and they're trying to fight the dollar here. And you can see that the market just doesn't care about what the ECB has to say about a cheaper euro, and they want that market upwards. And I do expect us to maybe retrace down to here. Don't expect a large retracement given this candlestick, but I do expect us to retrace maybe over here before continuing upwards towards 1.2 over the next week. And finally, penultimately, we have USD Swiss franc. And the Swiss franc, it looks like we didn't close on a bullish candlestick as expected versus the other currencies, but looks like we are going too soon in favor of the dollar, and that would enable us, if we were to close on a bullish candlestick, to draw our Fibonacci and look towards this area here to retrace to, then to short down to support. Very, very straightforward stuff there. And looking at the gold, and gold has been interesting because we did get that rally and it was pretty nice milking here, but I am looking upwards on the gold. Let's go to gold here. Seasonal tendency for gold, and you can see from July to around October, start of October, mid-October, you get a rally in gold, like palladium we talked about, but gold rallies from this time. So I expect, you can see that there was this big rally from late July to, literally over the past 2 days we had this massive rally, or decent rally. It seems that the market is pricing in this effect here, and we could be on our way to maybe 1900 potentially, and we could in fact be looking to eye these highs, maybe even to 2000. I don't know about that. I don't know about that too soon, but yeah, we had that big bullish move over here on a rebound, and some vaccine news came out, we got short, but then we wanted a like a bearish cap bounce, sorry, dead cap bounce. We didn't get it on gold, and instead it looks like we've got this bullish breaker here, this red candle just below is a bullish breaker. We haven't broken that bullish breaker, so we do look upwards, and we did reject this area here. It seems that there is sellers in the market, still want it down. Went down just as fast as it went up, but I do expect us to continue upwards over the next few weeks. And let's see for entries, and as you can see here, I am eyeing this area here, so 1811 to maybe retrace to before entering higher. That is gold. And on that note, let's go to fundamentals. And fundamentals are saying we have US dollars, PMI at 60.8, improvement. Let's look at the interesting stuff. Got cash rate for Australia looking to remain the same, I think, at 0.1%. Unemployment rate for New Zealand. What else? We have NBC for the pound, and then most importantly Friday, unemployment rate and labor statistics for US. And we're looking at an improvement in unemployment rate. So if we get that, then we could be bullish for the dollar. But it looks like the market is pricing in, pricing in not very good news for the dollar. My laptop is super hot right now. I'm not sure why. It's very bad. But anyways, I think that is all I have to say today. Thank you for listening, guys, and I'll see you soon. Bye bye.